Welcome back to the deep dive. I want everyone to just take a quick look at the calendar today. It is January 18th, 2026. And if you've been unplugged for the holidays, or maybe you just haven't looked at your brokerage account in a month, well, you are waking up to a completely different financial reality this morning.
It really is one of those moments where you blink and the entire landscape just shifts right under your feet.
We are talking, of course, about Novo Nordisk. I'm looking at the chart right now, and it practically defies gravity.
It really does.
The stock is sitting at $62.33. That is an 88% surge from its lows of $33.
It's incredible. You know, just 6 months ago, the whole narrative around Novo was, well, it was gloomy.
Oh, absolutely.
People were saying the growth story was over, the valuation was way too high, and the competition was just eating their lunch. And now
Analysts are scrambling to call this the start of a second rally.
Exact.
But it feels bigger than just a rally, doesn't it? It feels like a total reinvention of the company.
It is.
And the big question we need to answer today, the whole mission of this deep dive, is simply how? How does a company that was, on the ropes suddenly flip the table and start dominating the obesity market all over again?
Well, the answer is multi-layered, but it all starts with a single explosive catalyst, the launch of the Wegovy pill.
But hold on, we knew pills were coming. That wasn't really a secret.
No, it wasn't.
The shock wasn't the pill itself. The shock was the price tag, $149.
That number 149 is what broke all the models. It didn't just undercut the competition. It fundamentally changed the math of the entire pharmaceutical industry.
So here's the plan for today. We are going to unpack this strategy, which we're calling price down, volume up. We need to talk about the supply chain chess moves, which are honestly ruthless, the rivalry with Eli Lilly, and why analysts are suddenly upgrading their price targets to over $100.
It's just the perfect case study, right? It's game theory meeting medical innovation.
Let's start with what the sources are calling the oops moment. I have to admit, I got a kick out of this part.
I did too.
You have all these top-tier Wall Street analysts, people who are paid millions to predict the future.
Right.
And they're basically issuing public apologies this week.
They really had to eat humble pie. But, to be fair to them, their models were built on the old world. For years, the obesity market was modeled on scarcity.
High prices, low supply. The luxury good model.
Exactly. They assumed that these drugs would remain these expensive injections costing $1,000 a month and that growth would be, linear.
So when Novo stock was down to $33, the analysts looked at their spreadsheets and said,
well, the market's saturated at this price point. Growth is slowing.
And then Novo drops the Wegovy pill announcement. And they didn't price it at $800 or $600. They priced it at $149.
And suddenly, every single existing financial model was just obsolete.
Yeah.
Because when you drop the price by over 80%, you don't get linear growth. You get an explosion in demand.
I want to pause on that price point
Yeah.
because I don't think people realize just how aggressive that is.
It's incredibly aggressive.
Before this, if you wanted a GLP-1 weight loss drug, you were paying, or your insurance was paying, over $1,000 a month.
Assuming you could even find it in stock.
Right. So now we're talking about an 85% discount. In any other industry, if a company slashed prices by 85%, investors would panic.
Oh, they'd freak out.
They'd say, you're destroying your margins. You're leaving money on the table.
Right.
Why did Novo do this?
Because they realized that the $1,000 market was tapped out. That was the luxury tier.
Right.
But by dropping the price to $149, they are targeting the untapped 70% of the market.
This is the self-pay crowd.
Precisely. This includes that massive Medicare blind spot and everyone whose insurance just refuses to cover weight loss drugs.
So if the drug costs $1,000, the average person simply cannot pay out of pocket.
It's impossible for most families.
But at $150, that's what, the cost of a high-end gym membership or a daily latte habit?
Yeah.
That is actually doable for a huge chunk of the population.
Exactly. It moves the product from being a luxury medical device to a consumer commodity. In economics, we talk about the relationship between price, P, and quantity Q.
Right.
Novo is making a massive bet that by crashing P, the Q is going to go vertical.
Okay, I get the volume argument. You sell more units. But I'm still stuck on the profit margin. Usually when you slash prices, you hurt your bottom line. You might sell more, but you make less profit on each sale. How is Novo not bleeding money on this?
This is the critical piece that I think the market missed, at least initially. It comes down to manufacturing economics.
Okay.
You have to look at the physical difference between an injection pen and a pill.
So it's not just the drug inside.
No. Think about the pen. It's a complex medical device. It has a glass cartridge, a plunger mechanism, a needle, springs, a plastic casing.
It's basically a little machine.
It is. And machines are expensive to make. The cost of goods sold, or POD/GS, on an injection pen is high. But a pill is chemistry.
You just mix the powder and press it.
Well, that's a bit of an oversimplification, but essentially yes. Once you have the chemical formula, scaling the production of a pill is exponentially cheaper than manufacturing millions of mechanical pens.
So you don't have the device costs.
You don't have the device costs, you don't have the cold chain logistics to the same degree. It's just a different world.
So even though they're charging the customer way less, it actually costs them way less to make it.
Exactly. So their profit margins are likely protected. They aren't just cutting the price and eating the loss. They shifted to a cheaper delivery method, the pill, which allows them to compete on price without totally destroying their earnings.
That is the aha moment for me. It's a technology shift that enables a business model shift. But there's a practical problem here.
There's always a problem.
If you slash the price and demand goes vertical, if suddenly 10 million people want your drug instead of 1 million, you have to actually make the stuff.
Right.
We saw shortages with the pens for years. Won't this just create a massive shortage of pills?
And this brings us to segment 2, the supply chain chess move. Because Novo didn't just launch the pill and cross their fingers.
No.
They made a $16.5 billion acquisition to make sure they could win this war.
We're talking about the Catalent deal.
Yes. And for those who don't follow the plumbing of the pharmaceutical industry, Catalent might just sound like another corporate name. But this was a strategic masterstroke.
So what exactly did they buy?
They bought 3 key fill-finish sites. Now, fill-finish sounds boring, but it is the single biggest bottleneck in drug manufacturing.
Okay.
It's the final step where you take the active drug substance and you put it into the bottle, or the blister pack, or the vial.
It's the bottling plant, essentially.
Right. And you can't just set these up in a garage. They require sterile environments, regulatory approval. It takes years to build one from scratch.
So by buying Catalent, Novo just skipped the line.
They bought ready-made capacity.
But there is a nastier, more competitive angle to this deal, isn't there?
Oh, absolutely.
This wasn't just about Novo helping themselves.
Oh, no, not at all. This was a defensive and an offensive move. You see, Catalent was a contract manufacturer.
A gun for hire?
Exactly. They manufactured drugs for everyone, including Novo's biggest competitors.
I think I see where this is going.
By buying Catalent and taking it in-house, Novo essentially changed the locks on the doors. They secured that capacity for themselves.
Yeah, and by definition, denied it to everyone else, specifically Eli Lilly.
Specifically Eli Lilly. Lilly was using Catalent for some of their production. Now, their biggest rival owns the factory. It's a blockade.
Wow.
Novo is effectively saying, we are going to flood the market with our volume, and we are going to make sure you struggle to find a factory to make yours.
That is ruthless. It's like buying the only highway into town and putting up a toll booth that only you can use.
It really is. The source material frames the 2026 outlook with a very simple phrase. He who can make it wins. You can have the Nobel Prize-winning science, but if you can't get the pill into the bottle and onto the shelf, you lose.
So we have the price strategy and we have the manufacturing fortress. Now let's look at the actual rivalry.
The main event.
Because this really is a two-horse race between Novo Nordisk and Eli Lilly. And I found this really fascinating analogy in the research notes comparing them to fashion brands.
The LVMH versus Zara analogy, I think this is the perfect way to visualize it.
Okay, so break it down for us. Who is who?
So Eli Lilly is LVMH, Moet, Hennessy, Louis Vuitton. They're the luxury house.
Okay.
Their strategy is focused on premium efficacy. Their drugs are dual agonists, targeting GLP-1 and GIP receptors.
Meaning they're just stronger.
The data suggests yes. They offer higher weight loss percentages, somewhere north of 22%. But like a Louis Vuitton bag, it's a premium product with a premium price tag. And for now, it's largely an injection model. They are chasing high margins per unit.
Okay, so Lilly is the boutique. That makes Novo.
Novo is Zara. This is the mass prestige strategy. Their pill might offer slightly lower efficacy, around, say, 17% weight loss compared to Lilly's 22%.
But 17% is still life-changing for the average person.
Oh, absolutely. And here's the kicker. Novo wins on convenience because it's a pill. And they win on accessibility because it's $149.
Right.
They are playing the fast fashion game, acceptable quality, high volume, low friction.
It's the difference between saving up for a year to buy a couture gown versus walking into a store and buying a really nice dress off the rack today because it fits your budget.
That's a perfect way to put it. And the market creates space for both, but the valuations are telling a different story right now.
The PE ratios.
Right. If you look at the price-to-earnings ratios, Novo is trading around 26 times earnings.
Which is pretty reasonable for a high-growth tech or pharma company.
It is, but Eli Lilly is trading at 48 times earnings.
Wow. So Lilly is almost twice as expensive relative to its profit.
Right. The market has basically priced Lilly as the winner because they have the quote-unquote best drug, but they priced Novo as if it was losing.
And this price-down, volume-up strategy makes Novo look like it's on a half-price sale compared to Lilly.
That's why the analysts are scrambling to upgrade the targets. They see that valuation gap closing.
But we have to play devil's advocate here. What is the risk? If I'm an investor, what keeps me up at night regarding this Zara strategy?
The bear case is that Eli Lilly isn't just sitting on their hands. They're developing their own oral pill. It's called orforglipron.
That is a mouthful.
It is, but if Lilly launches that pill and if it has better results than Novo's pill, say 20% weight loss, then Novo's strategy could crumble. They risk becoming known as the cheap, low-quality alternative.
The generic brand nobody really wants.
Exactly. If the efficacy gap is too wide, people might just be willing to pay up for the Lilly pill. But for now, Novo has the first mover advantage.
They're in the market today with a cheap pill.
Right. Lilly is still playing catch-up on the oral front.
There's another layer to this valuation story that I think is crucial. For the last few years, the media has treated this whole industry as a vanity project.
Oh, yeah.
It's all about fitting into a wedding dress or getting a beach body. But the conversation in 2026 seems to be shifting.
It's shifting from cosmetic weight loss to survival medicine. And this is the key to the trillion-dollar valuation.
Because vanity has a price ceiling.
Right. You can't build a global empire just on people wanting to look good. But if you can prove that your drug prevents heart attacks or kidney failure or strokes, then you unlock the real money.
You unlock the insurance companies and the government healthcare budgets.
That's it. And Novo has been spending big money to prove this. If you were looking at their recent acquisitions, none of them are diet companies.
No, I saw that.
Look at the list. They bought Cardior for $1.1 billion. Cardior focuses on RNA technology for heart failure.
Heart failure, okay.
Then they bought KBP Biosciences for $1.3 billion. That company targets chronic kidney disease and high blood pressure.
So why is a weight loss company buying heart and kidney companies?
Because those are the major comorbidities of obesity. Heart disease and kidney failure are what actually kill people, and they're what costs the healthcare system billions.
Novo is building a data moat.
A data moat, exactly. They want to be able to go to an insurance company and say, look, don't just pay for our pill because your client wants to lose weight. Pay for it because it prevents the heart attack that's going to cost you $100,000 next year.
That is a much stronger sales pitch. Pay me $150 now or pay a fortune later.
Precisely. They also bought a company called Aerocal, which is developing tech to reduce nausea. And that sounds minor, but it's huge for the volume strategy.
Because nausea is the #1 complaint. Yeah.
It is. If the pill makes you sick, you stop taking it. If they can fix the side effects, the retention rate goes way up, and the customer stays on the drug for years instead of months.
And that's pure volume strategy.
See your volume.
So let's zoom out a bit. We're in 2026, but the source material gives us some projections for 2030 that are honestly hard to wrap your head around.
They are astronomical. The global obesity market is projected to hit $1,500 billion by 2030.
$1.5 trillion. That is bigger than the GDP of most countries on Earth.
It's massive. And the composition of that market is going to flip. Right now, injections are the standard. But the prediction is that by 2030, 40 to 45% of the entire market will be oral medication.
So nearly half the market will be taking pills, not shots.
Which just makes sense, right? Given the choice, almost everyone would prefer to swallow a tablet with their morning coffee rather than injecting themselves.
And what about the penetration rate? How many people are actually getting treated?
This is the statistic that shocks me every time. Currently, despite all the news coverage and all the hype, less than 2% of the global obese population is medically treated.
2%? That's a rounding error.
We are at the very, very beginning of the adoption curve. The goal of this cheap pill strategy is to drive that number from 2% to 15 or even 20%.
Going from 2% to 20%, that's a 10-fold increase in the customer base.
And that brings us right back to the price down, volume up thesis. Even if you cut your price in half, if you multiply your customer base by 10, your revenue doesn't just grow, it explodes.
It's the Amazon strategy applied to pharma. Low margins, massive volume, total ubiquity.
It's a race to become the standard.
So let's bring it all back to today, January 18, 2026. We watched Novo Nordisk hit a low, looked like it was out of the game, and then just reinvent itself. They dropped the price to $149, they bought the supply chain to block their rivals, and they pivoted to this mass volume strategy.
It's a comprehensive turnaround, and the analysts are finally waking up to it. The revised price targets are sitting around $100 to $107.
Which suggests that even at $62 today, there is massive room to run.
If the volume strategy works, $62 will look incredibly cheap in hindsight.
It really changes how we think about this industry.
You
know, we often get obsessed with the science. Who has the strongest molecule? Who has the best data?
Right.
But listening to you today, I'm realizing that maybe the race isn't just about who has the best drug.
No. I think we are entering a phase where the race is about who can turn a medical miracle into a daily commodity, like a vitamin.
That is a powerful idea. If Novo wins the volume war, does it even matter if Lilly has the better drug?
History is full of examples where the best tech didn't win. Betamax was better than VHS, but VHS was cheaper and more available.
Accessibility is a weapon.
It's a huge weapon.
Well, we will certainly be watching the volume numbers, the hue in the next earnings report.
Yeah.
That is going to be the truth teller.
Absolutely. Ignore the noise, watch the cue.
Thanks for diving in with us today. This was fascinating. We'll see you on the next one.